Swinging around today. At the moment, Brent is down 0.3% at $107 a barrel. But yesterday, interestingly, US oil prices ended the session above $100 a barrel for the first time since the war started.
So that's oil. Oil is reacting to this story this morning. Stocks are also reacting. We saw actually the US session lost momentum through the day yesterday on the back of what we'd heard from the president earlier on.
Picture this. A country hints that oil shipments, the lifeblood of the global economy, might no longer be tied to the US dollar, but instead to another currency, like the Chinese yuan. Maybe you saw a headline like that, or maybe you didn't, because here's the strange part. Stories like this barely make a ripple in mainstream news, but online, they spread like wildfire. So let me ask you this. Why would something like this matter so much? Here's the thing. It's not really about one country or one announcement. It's about something much bigger. The system behind the US dollar itself. Now think about this. What actually makes a currency powerful? Is it just a strong economy? Or is there something deeper going on? Most people assume the dollar dominates because the US is strong. And sure, that's part of it. But a big part of its power comes from how global trade is structured, how money moves, how countries pay each other, and what currency they're expected to use. If countries around the world have to use a certain currency to buy essential things, like energy, what does that do to demand? Once you see it that way, something clicks. The dollar's dominance isn't just economic, it's structural. And when that structure starts to shift, money doesn't just sit still, it moves. So the real question is, what happens if that structure starts to weaken? In this video, we'll break it all down, how the dollar became dominant, what the petrodollar really is, why countries are slowly moving away from it, and what happens if they succeed. Because currencies don't stay powerful by accident. They stay powerful because there's demand for them. And when that demand starts to change, everything else follows. Before we get into it, if you're new here, welcome. This channel is where we dig into the stuff that actually happened behind the headlines. If that sounds like your kind of thing, hit subscribe. Alright, let's get into it. For a long time, money was tied to something physical, gold. After World War II, under the Bretton Woods system, the US dollar was linked to gold, and most other currencies were linked to the dollar. It was a simple chain of trust, clean, predictable, almost boring. But in 1971, that system broke. The dollar was no longer tied to gold. So if the dollar isn't tied to anything, why does everyone still use it? Seriously, why trust it at all? Here's where it gets interesting. Instead of relying on gold, the US created demand another way. Through oil. In the 1970s, the US reached an understanding with Saudi Arabia and other Gulf countries. Oil would be priced and sold in US dollars, which means if any country wanted to buy oil, they first needed dollars. Think of it like a global ticket system. If you want oil, you need the dollar ticket. No ticket, no entry. Simple as that. But here's where it gets even better. Now imagine you're an oil exporter. You sell oil, and suddenly you're sitting on billions of US dollars. Sounds great, right? But now what? You don't just let it sit there. That money loses value over time. So what do? You invest it, often back into US assets, like government bonds. So the flow looks like this. Trade creates dollars. Those dollars get reinvested. And that reinvestment creates even more demand. Stay with me here, because this part really matters. The dollar isn't just being used. It's being recycled back into the system. Pretty clever, right? And that is the core of the petrodollar system. It creates a constant, built-in demand for US dollars around the world. Now here's where things start to change. Countries don't make decisions based on loyalty. They follow incentives. Always have, always will. So let's think about this for a second. If you're a country holding a lot of US dollars, what are the risks? Well, over time, a few pressure points started to show up. First, there's money printing. When the US increases the supply of dollars, it can lead to inflation, which slowly reduces the value of those holdings.
So I was watching these documentaries thinking I could do it. because I'm clever in these guys. So literally opened a trading account.
Sanctions and asset freezes. Because the dollar system runs through US-controlled financial infrastructure, access to those funds can be restricted, and we've already seen cases where countries suddenly couldn't use their reserves. And that leads to a pretty uncomfortable realization. If you hold dollars, but someone else controls the system, there's a level of risk built into that. Now imagine you're in that position. You start asking different questions. Should we rely less on the dollar? Is there a way to trade without it? What are our alternatives? And this isn't just theory, it's already happening. China, for example, has been pushing for more trade to be settled in yuan, especially with its trading partners. Some Gulf countries have started exploring non-dollar energy deals, meaning oil or gas transactions that don't go through USD at all. These are still small, but they signal a shift. Think of it like this. It's like using one payment app for everything. Until one day you realize your account can be frozen at any time. Suddenly, having a backup doesn't sound like a bad idea. And that is the key insight here. This isn't about rebellion. It's not countries trying to take down the dollar. It's just risk management. So what we're seeing isn't a sudden abandonment. It's something quieter, slower, and more strategic. Countries aren't dropping the dollar overnight. They're just becoming a little less dependent on it. Up until this point, most of the focus has been on oil. But the dollar system extends far beyond energy. Oil is just one visible part of a much larger structure that supports the dollar's role in the global economy. A significant share of global trade is still conducted in US dollars, and only a portion of that comes from oil and gas. The majority comes from everyday economic activity, manufactured goods, raw materials, services, and cross-border transactions happening constantly around the world. The dollar isn't just part of the system, it's built into it. The same pattern we saw earlier still applies. Countries trade using US dollars, accumulate those dollars over time, and then reinvest them into US financial assets like government bonds, stocks, or other dollar-based instruments. It's a cycle that runs continuously in the background, rarely noticed, but incredibly important. What's changing is not one single part of this system, but several parts at once. Some countries are starting to settle trade in other currencies. Others are building alternative payment systems or strengthening regional financial networks. On their own, these changes might seem small, but taken together, they begin to shift the structure. Picture a system that used to run in one direction, smooth and predictable. Then slowly, new paths start forming, not enough to replace the original, but enough to give people options. That's what's happening here. The global economy isn't abandoning the dollar. It's adjusting around it. Reliance becomes slightly reduced, flexibility increases, and over time, the system becomes less centralized. The dollar is still dominant, but it's no longer the only route through the system. So let's pause for a second and ask the obvious question. What actually happens if oil isn't priced in dollars anymore? Because this is where a lot of people jump to conclusions. You'll hear things like, the dollar is collapsing, or the system is ending. But in reality, it's not that dramatic. At least, not right away. In the short term, not much changes instantly. The dollar is still widely used across global trade, and most financial markets are still built around it. There's still a high level of trust, and more importantly, there's still liquidity, meaning it's easy to use, move, and invest. And that matters more than people think. Even if some oil trade starts happening in other currencies, that doesn't mean the dollar disappears from the process. In many cases, countries may still convert those currencies back into dollars, or continue investing in US assets like bonds and stocks. So the system doesn't just switch overnight. It's more like changing how you pay for things, but still keeping your savings in the same bank. The method shifts, but the foundation stays. That's the nuance here. Yes, alternatives are growing. Yes, more countries are experimenting with other currencies, but that doesn't automatically replace the dollar. What it does do is slowly weaken its dominance. And this kind of system doesn't collapse all at once. It doesn't break in a single moment. You've probably seen the headline, "The dollar is dying." But is it really? Not exactly. The demand for the US dollar is still strong. It's still the most widely used currency in global trade. And the financial system built around it remains dominant. That hasn't changed overnight, and it likely won't anytime soon. But here's what is changing: the direction. This is a story about gradual shifts in incentives, in trust, and in how the system is structured. Countries are slowly adjusting how they use the dollar, not abandoning it, just relying on it a little less. And when enough of those small changes add up, the system starts to look different. So what happens if the system weakens? The dollar doesn't disappear, it just loses some of its dominance. Global finance becomes more spread out, more multipolar, with different currencies playing bigger roles over time. And most importantly, this kind of transition takes time, years, maybe even decades. So no, the dollar isn't dying, but for the first time in a long time, it's facing real competition. Alright, that's it for today. Thanks for watching. Catch you in the next one.